I'm gonna do this. Give me a second so I can get rid of it afterwards. Because it starts to. There you go. Let's get rid of it. So we should be recording. So amazing day, guys. Let's get started. We're having a look at GBP USD, understanding what's going on in the markets. Okay. I'm going to manage my trade real quickly. Second. Let's get involved. All right, so. All right, so we're looking at this market, this pair, and we have to understand what's going on. So from obscurity, we want clarity. Okay, so we can see here, we can see here, we can see here, we can see here, we can see here. We can see that this market is bearish. It's making lower lows and lower highs. That's what we can see. And the market's been respecting this line up here. Yeah, this is the top of the range, i.e. this is the premium. Anything that's at the top of a range is a premium, means it's expensive there. All right, it's a premium. Just like if you used to go and buy whatever you wanted to go and buy, and for whatever reason it was expensive, you would be paying a premium for that thing. Okay, now let me tell you something. The same way in life that we don't want to buy when things are the most expensive, okay, or we don't, or if things were very, very expensive and we was the seller, we was the retailer, at that point in time we'd be keen to sell them. We'd be like, wow, I've got a box of buttons that I bought for a penny each, and now those box of buttons are worth £1 each. You'd be, there'd be a lot of pressure onto you for you to sell, okay, for you to sell those box of buttons and make as much money as possible. This is the same principle that we have in our markets, and we have to remember that. So therefore we're in a premium. Now these markets can change for whatever reason. They could stop respecting this line and start becoming bullish, this market. But as it stands, we have to trade what we see. We can't trade in our fantasies, we can't trade in our dreams. We've got to trade what we can see, and what we can currently see is that the Great British Pound has been losing strength against the United States dollar. How do we know that? Because it's GBP USD. All right, so therefore GBP is on one side, GBP is on one side, okay, and on the other side is our USD. All right, USD. And therefore, if this market is going down, the way we see it, the way we can picture it in our brain, how we can remember it, all right, is that the USD is heavier than GBP, meaning that if this was a scale, that the markets would be going down, meaning USD heavier, USD stronger than the GBP. That's why we've been going down like this. If it was the other way around like this, GBP is heavier, stronger, more weight, getting stronger. The Great British Pound is getting stronger against the US dollar. So this would be heavier on our scale, and the market would be going up in this direction. Okay, but we can see the markets actually be going down like this. The Great British Pound has been losing strength against the United States dollar. We can see that, okay, and we can see that this is the premium, meaning that if you was up here, every time this market came around this area up here, if your idea was you're going to be selling the market, you would have been in the money. Look, from here, from here, from here. All right. Because this is the range the market's been trading. So now we're back up into this premium here. We're thinking to ourselves, why not do the same? Why wouldn't it do the same thing that it's done before in the past? Now, that is not a definite, but we can only go based upon the information that we have. We can't trade based upon information that we don't have. Okay, we got to trade based upon the information that we have, and then when the market shows us something different, we can adjust and change our ideas and our concepts. We can adjust and change the things that we can see and go, okay, something else is happening. All right, okay, I get it. All right, but right about now we're in this premium area. All right, if I zoom down to my daily, which is the daily chart, meaning that every single candle is a whole 24 hours, a whole day in time. we can see how this market, all right, if I was to connect some dots, all right, if I was to connect some dots like this, if you want, okay, we can see how this market has been making some higher highs, higher lows. I'm going to put in some little points on my marker pen. Here, here, here. So here, move this one. Here, and obviously this one down here. I should make these dots a different color, but it is what it is. So higher high, higher low, higher high. Okay. Now within these ranges, like if I was to connect these dots here, to connect these dots here, let me get rid of some of these circles and stuff. I don't want to be throwing us off. Okay, we don't need these in here anymore. We don't need these in here anymore. Okay. Give me a second, guys. Within these dots here, if I was to connect these lines, these dots, so there's one down here somewhere, connecting it to here, connecting it to here, connecting it to here. Within those lines, there's this energy again of this market moving in a wave. All right. Like for example, if I was to do this, let's change the color. Within this push up, you can see the market do this, and then do this, and then do this, and then do this, and then do this. Then we can see that energy that's happening within that one white line. So if I was to connect those dots, we can see something happening like this. Look, within that push, and that's how the markets move. The markets move. Let me make that a different color. The markets move in waves. So yes, this orange energy is part of this big white wave here, this push here, but it still went higher highs, higher lows, higher highs, higher lows, higher highs. Okay, with that said, if we get rid of these, okay, the market's currently come up into our premium level, which is this big yellow line. Remember, we're showing that premium, and we've seen the market break some of this structure. If I put some of these dots back, sorry, all right, you can see some of these dots. We can see how the market has broken some of this structure, broke some of this structure. Let me make this a white line, okay? Meaning that maybe the market wants to do something else from this premium. Remember what we said, that the market wants to sell from a premium. So maybe we're into sell energy now. Yeah, maybe we've come up into this premium, very expensive price, and the market's like, okay, listen, we've been bullish for far too long. I think it's time that we start to sell. Let's start to sell things off. Okay, we've got all of this stock that is sitting around us, all of these trainers, all of these buttons, all of these whatever it is, and right now it's a great time to sell them. Let's start selling them off. People want them. Let's sell it off. Okay, that's why the price is so expensive, because people evidently want these things. Let's sell them off. Okay, and we've seen structure being broken here, but as we've just seen on the way up, these markets move in waves. So even though the structure's been broken, we have to be conscious as day traders. I'm going to make this a different color, blue, that the market may want to come down here in waves. May want to come down here in some sort of waves. If I was connecting the dots, I'm talking about looking like this. Maybe, I'm not saying for sure, maybe the market wants to move like this in these beautiful waves. Okay, just maybe that's the scenario. Yeah, and if that is the scenario, then right now, even though this market we're trading from a premium, it can make a bullish retracement. Because this is it moving bearish, but it's not impossible that this market decides to make a bullish retracement. Okay, you can hear my alerts ringing for gold. I didn't put gold up in here, but we are looking at gold or Euro USD and gold. To be fair, I missed that one out. We're looking at. So I've just taken 1700 out of GU, okay, and I'm also in a gold buy, and now there is an opportunity. I'm going to quickly flick down to the guys because obviously I know how to trade, and just look at telling them what they should be looking at, and then we'll get back to going through the basics. All right, so this morning I was in this trade. All right, I was in this trade this morning. And we've tapped into a region which is essentially 50% of an imbalance, a huge gap we can see in here. Now I'm thinking to myself, really, that this market could come down to a previous battlefield all the way down here. That's what I was hoping. But true, I was about 1500 up here. I squeezed up my stops and I was stopped out right about 2 seconds ago. Okay, and I'm watching this market and I'm thinking to myself that this previous battlefield down here is still, as you can see here, it says previous battlefield. It's still a location that I'm thinking to myself the market could push towards. Okay, however, I am watching it. Okay, remove some stops. All right, I'm watching it. All right, now ultimately on a daily time frame, I've made this market is in one of my outside candles. Have a look. If I go to my daily candles, we're looking here. This GU as an outside candle is a big bearish candle. It is. Let's have a look at it. Okay, let's have a look at the GU outside bearish candle, which is this big red candle over here. Okay. However, I'm a little bit concerned that we're at the bottom of a range and at some point in time this has to turn around and push up. Okay, but what I am saying is regardless of whether it wants to push up or whether it's going to come down, the imbalance of this candle, if I was to rewind this one candle, just rewind it to here, okay, even if this market wants to push up, because I'm thinking we're at the bottom of a range, or we want to stay with our outside candle energy and it wants to continue being bearish and fall down from where we are right now, which the candle opened up here. Oh guys, I want to look at NAS as well, sorry. From where we are up here, this market may want to close this imbalance first. Alright, might want to close this imbalance first. Alright, so if I go and I look here, this was last week, okay, and marked out our candle, our daily candle, have a look. This is our daily candle. Let me mark some lines. We're saying it's a bearish candle, pushing all the way down here, but then we understand this whole imbalance here exists. This whole energy in here exists, but we're basically saying that, if we do this, which we can't see at the moment, but let's just do this. And then I'm going to put a blue line here for the low. Okay, this is the previous low, the lowest point over here. We're still concerned about this imbalance getting closed. That's whether it wants to come down or whether it wants to push up. All right. So, and when I say push up, the only reason because we're saying we're at the bottom of a range, and there's that potential the market might want to push up from the bottom of the range. The outside candle energy doesn't last forever. It's overridden by market structure. Okay. Now, if we drop that time frame down here, and I'm going to hit play now. Okay. So now we're going to start going. Oh, see, this is the issue. Issue is that this market opened all the way over here. Sunday night, this market gapped up all the way over here. So that imbalance, which is that little green box that I drew, had already been closed up. All right, straight away. All right, straight into Monday. All right, Sunday night straight into Monday. So therefore, it was a previous outside red candle. I'm thinking to myself that maybe this market wants to come down and start pushing down this energy and coming all the way down here, at least down to this previous battlefield. And let's have a look and see what happened. All right, there's a reason why I looked at it when I was able to get up and look at the markets. The market danced around Asian session up in here after closing that imbalance. Have a look. Danced around Asian session after closing that imbalance, and then started to break down. All right, there's London session, tapped in, started to break down. Hence the reason why I was in there for this sell. Now I am concerned at this point in time here that the market may, when we get actually down to this previous battlefield, because we're not quite there, then maybe the market might have a reaction because we've had a lot of bearish energy here. This has been bearish for like, what's the time there? For like over an hour. This market's just been falling. Okay, so I have to be conscious of that the market has just been falling for over an hour. Okay, but the reality is that this market came already, closed that imbalance. We had a previous red outside bearish day, and even though we're at the bottom of the range, I've got to trade what I can see. All right, I have to trade what I can see. Let's have a quick glimpse at gold, and then we'll go back to going through the basics. Okay. All right, so this is our gold. Let's zoom out of gold also. And the reason why we zoom out is because we always have to look at our charts from the bigger picture. We have to get a bigger picture overview to understand what the market's been doing, so that we can try and understand what the market's going to do. All right, we need to know our history, yeah, for us to be able to move forward and know, you know, how our present and our future should play out. Okay, so ultimately we can see this market in here. This is gold. Okay, now gold has been bullish. Okay, we can see it's been bullish. If I zoom all the way out and go back to a historical date, we can see that, look at this market here. It's been making, if I put some dots in, if I put some dots in, it's been from being in a low, this is going all the way back historically, the market is bullish. Okay, now within this massive big range, once again, we have our, impulse, our waves, our impulse, our retracements, our impulse, our retracements, our impulse retracements, our impulse, our retracements, our impulse, our retracements, our impulse. We have this wave action happening. All right. So this is why we look at things on a bigger picture, so we understand, okay, this is what the market's been doing. And we want to see where we are in the wave. We want to know, where are we in the wave? All right. So we can see here, for example, and what I'm doing here, for those who don't know, is I'm simply connecting some dots like a child, connecting some lows, all right, and then pulling out a parallel line and seeing whether the market is in a premium of that range, in a discount of that range, or even more compelling, has burst out of that range because it wants to get even more bullish. And we can see here with this gold that there was a range that I drew, that white range, and the market is even, going to go there, popped itself out of that range. Yeah, it's pushed outside of that range up into these levels over here. Yeah, so the market was in this little white little range. The market's even, it's right up here, it's past the premium. It's very expensive, but we know why fundamentally gold has been pushing up like this and getting so expensive, because gold, for those who don't know, is a safe haven asset. For whatever reason, people feel safe if they can't, get their money out of this market or that market or this stock or that stock. They say, listen, bang it in gold. They think to themselves, gold is a safe place to have their money. It's like, worst case scenario, I couldn't pay you for your car in cash. More than likely, you're not going to take wood for it. Yeah, you might not take aluminium for it. You might not take chocolate biscuits for your car. If I say, bro, I ain't got the cash here, but I do have 20 grand in gold, you might be a bit hesitant, but you're going to be more likely to say, okay, give me the gold. Yeah, once you've checked that it's real gold, once you've checked that it is actually the right, weight to measure out for 20 grand's worth, you're more than likely going to take 20 grand in gold than you are going to take 20 grand in buttons or aluminium or wheat. You're going to take 20 grand in wheat or 20 grand in cocoa beans. Yeah? But gold is seen as that, listen, I don't know what's going on in the market. The world is on fire with this war and that war and this election and that election and this going on and aliens turning up and I tell you what, bang my money in gold, because they believe that gold is a store of value. Yeah, it is seen as a precious metal and it has real world application in all of our technology, etc, etc, etc. All right, so great, conductor. So for that reason, that's why gold has been going up and up and up and up. Because when people are not too sure about the world, which evidently they are not, which evidently the world is on a daily basis something new. The most recent one is nuclear war, okay, and the threat of nuclear war, okay, which is it's a pretty big one, okay. That is making people who have, wealth say to themselves, listen, I don't know what's going on. I don't know what's going to go on with the dollar. I don't know what's going to go on with this company or that company. And for that reason, I want to put a larger portion of my portfolio in gold, a safe haven asset. Hence the reason why it's been so bullish. Okay, but we can see here on a smaller time frame that the market came up here to this high point when gold was at a particular high, particularly bullish. Okay. And we can see how the markets have had a little bearish reaction. All right, the markets started pushing down. All right, the markets have started pushing down from here, and on a 4-hour time frame started to break some of that structure. If we was looking at it once again, we can go to our line chart. Let me try and hide this indicator, which is quite messy. All right, this is just an indicator showing sessions. All right, it's not an indicator doing anything. It's not trying to predict the future. It's just showing up when our sessions are, from Asian session to New York to London. Okay, we can see how in this wave of this market coming up here, making these higher highs, higher lows, higher highs, higher lows, higher highs. Okay, we can see the market's been breaking some of this structure on the way down. Smash, bang, wallop. And as we understand, when the market breaks structure, whether it's going bearish or, but it still moves in waves. So we broke down here, then we pushed up into this level, made a lovely manipulation M pattern at the top there, and then maybe this market's going to be bearish from here. All right. However, we can't just hit the button for a sell, because we understand that on a smaller time frame as day traders, that the market's still moving waves. It's about entry. So we might be overall thinking to ourselves, okay, this market's looking a little bit bearish. Tapped into the top of this range, made a big manipulation M on a 4-hour time frame. Okay. However, we're thinking to ourselves, today, what might happen today? All right. So if we go to our daily time frame like so, we can see that today, this market, previously yesterday was a big green candle over here. Yeah, big green candle over here. That big green candle over here, the concern is that even if we want to go bullish some more, the market may want to come down and close this imbalance. Just rewind it one day and understand what I just said. This was the previous big green candle on a Friday. All right, it's an outside bullish candle, but we're in the top of the range. So even if we want to keep going up, the concern is that the market may want to come and close up this big imbalance once the new candle opens. Yeah. So if we drop our time frame all the way down to, I don't know, 15-minute time frame, like so. Okay. This is Friday, and then we hit play. This is now turned into Monday. Look, the market first and foremost has come and closed up that imbalance. So now its chores have been done. It's done the chores needed in regards to closing up that imbalance. Okay. Now the question is this market going to continue being bullish and break outside of this range, coming up into these levels? Or because we're at the top of a bigger range, i.e., this blue channel, is this market going to decide it wants to come down here and start doing something different? All right, it's just broken this level here, made a lower low. This is a lower high. Is it going to make a lower low or an equal low? That's the question that we don't know the answer to. Okay, even though we've had a big green candle in here, yes, we might turn around and say, you know what, this is just tapped into the low of this yellow range, and now it wants to come up here. That's the question we don't know the answer to. In my opinion, this market has broken structure, even with this push up. Even if it wants to go back up in here, this push down here, I'm going to put it, make it a color so you can see it, make it orange. This push down here, making lower lows, lower highs, lower lows, lower highs, lower lows. This push up in here, this big push, even if it wants to keep going up, in my opinion, a bearish push at least down to 50% of the range is on the cards. So for me personally, I like this to try and get in for the sell. Even though we had an outside green candle, but we're at the top of a range, I like it on a shorter term of potentially this market trying to get in here for the sell. Now what that may mean is the market may first buy up in here to close some of this imbalance, and we can either sit and wait for that to happen and then get our entry somewhere around in here and try and see if we're going to get involved in the sell, or if we're savvy enough, we can buy into the sell. Okay, that's a more complex thought process, but we can buy into the sell. All right, now I'm risk free at the moment in the gold position, and what I am doing in that gold position is buying into a potential sell. I'm in here for a buy somewhere down here, but it's a risk free position. It's dancing around now. Previously it was doing okay. It's dancing around now, but I'm buying into this potential sell, which may close up this imbalance that we know that the markets hate inefficiencies, hate imbalances. Okay, and then it may tap into a previous battlefield, okay, which is going to be around about here, okay, and then maybe I'll be thinking to myself, maybe this market's going to maybe sell off some more. However, like I said to you, the general energy of gold has been bullish, but I'm just saying for myself, even if this market wants to continue being bullish, this impulse here from here to here, 50% of that impulse may be an area where the market might decide to have a look. If I draw the path for you, may decide to, oops, let me draw the path for you, may decide to retrace to. That's even if it wants to go up. So for me right now, I am currently on this part of this journey of potentially buying into this level here. When it gets up into this level, maybe taking my profits and looking to see if there's going to be a break, a change in character, a break in structure, and then this market wants to sell down. If not, and this market just keeps going up and up and up and up to the moon, well then great, because I'm in the buy already, all right? But we're watching it at the moment and see here. Now, could this market just melt off here and I can be wrong? Of course it could. Of course it could just melt off right there and I'm incorrect and it doesn't care about me and says, you know what, Jay, I don't care about you. We're just going to come down and do something mad. It could do. But that's why every trade I take, I have to manage my risk, meaning that I'm taking a trade based upon the fact that I am willing to lose that money. All right. If I took a trade and I wasn't willing to lose that money, it was too much money. I can't take that. I'm too big. I'm too big in my lot size. All right. For me to take the trade. See, trading is about risk management. It's not about you know exactly what's going to happen, because you don't know what's exactly going to happen. So if you didn't know what was exactly going to happen, you would manage your risk, wouldn't you? You wouldn't go all in. You wouldn't be like, yeah, I'm going all in. Like you've come. If you came from the future, you know, you drove your DeLorean and you came from the future and you knew the market was going to go down. By all means, you can go all in. Even then, you'd be a bit conscious about going all in. I mean, maybe when you came back from the future, maybe you've changed something. Yeah, when you came back from the past, sorry, maybe you've changed something in the future. Maybe you're going to be wrong. Even then, you probably wouldn't go all in. Okay, you'd be a little bit like, okay, I'm going to go in heavy because I've seen it from the past. All right, but just in case, you know, me coming through the ripples of time from the past has changed something in the future. Just in case, I'm going to save a little something so that I don't completely blow out my account. And it's the exact same principle when it comes to trading. All right, our trading energy is about management of risk. That's what it's about. It's about management of risk. It's not about we're going to be the absolute bees, the best traders known to man. Every time the market moves, we know exactly what's happening pip for pip, and we're going to predict the future. I think if we take that angle, we're setting ourselves up for failure. All right, we are setting ourselves up for failure. Okay, and I don't want that to be the case. I don't want us setting ourselves up for failure. I want us to be able to say, you know what? We understand these markets can be unpredictable. We are trying to predict them with an edge, but we understand they're unpredictable. So we're going to manage our risk with every trade. That means if you're only willing to risk $100 at a time, you can't lose more than $100 at a time. So you've got your edge, you've got your understanding, you're looking at the markets, you're breaking it down, you're trying to make sense of things, but at the same time, you've put this magnificent safety net in that you're only going to take trades and you're going to risk this much money. Why? Someone's like, why don't you just go all in? It's not big enough. You're not going to go all in because you don't know what the markets are going to do. Right now, I think this market may come and do this, but it might just go, no, and just do that. Yeah? It might just do that. So I can't just go all in. I can't just go and, throw caution to the wind. Look at this indecision, all these wicky candles here. The market's having an argument. The market doesn't really know what it really wants to do right now. It's like, yeah, should we go up? Should we go down? Should we go up? Should we go down? So the fact that I'm in here trying to catch a quite advanced move and buy into a sell, I've got to be like, even though I'm doing that, if I get it wrong, if I'm incorrect, I can't blow my account with it. I have to be like, oh, took an L, or took a loss. Annoying, but not end of the world. All right. Now, from time you change your attitude to trading to this, yeah, you change your attitude to this fact that you don't know everything. Your trading strategy isn't the be all and the end all, and with it's only your trading strategy that that you understand that what you're doing is taking calculated risks. Then you can grow your wealth, because if you've got an edge and you understand what's happening in the markets, yeah, you're not going to consider, you shouldn't be consistently incorrect. It's like flipping a coin. Don't tell me you're going to keep flipping a coin and after a while your heads ain't going to turn up. Head's going to turn up. Yeah, it might not turn up on the time you called it. It might not turn up on the second time you called it, but I guarantee you keep flipping that coin, heads is going to turn up. Okay, and when heads turns up, that's when you're able to stay in that trade and understand that you want your rewards to be more significant than your risk. You want to be in there saying, okay, this is gonna go. I'm gonna allow this trade to run for a 1 to 5, a 1 to 10. Yeah, you're gonna be like, okay, and that's gonna erase all the times when you flip that coin and your, heads didn't turn up. That's it. You're a coin flipper with an edge. All right. Now, someone say, isn't that gambling? Well, it's not gambling. Yeah, it's just understanding the parameters that you're working within. The parameters that you're working within is that you do not know the future. And these markets can be unpredictable because there's lots of factors that can dictate these markets. Fundamental factors. Yeah, things that are happening in the world. Like a natural disaster can occur in a financial district, affect the markets. Aliens could turn up, affect the markets. Policy could turn up. Donald Trump can go on Twitter and say something crazy, can affect the markets. Yeah, there's so many things that can affect the markets that put it outside of your control. All right, that at that point in time, you've got to, just understand that. You've got to accept that. You've got to accept that. Whoa, wait a minute. I actually, I'm not in control of these markets. From the time you do that, I'm telling you, your trading gets better. If you're taking these trades and you keep taking losses and you're like, oh my gosh, what am I doing? This doesn't work. This is nonsense. It's because you haven't understood the landscape that you're playing within. The landscape you're playing within is you can fail your way to success in these markets. You can take a loss for $100, another loss for $100, you're $200 down. Another loss for $300, you're $300 down. The next day, because obviously you're capping your daily losses, you don't want to take loads of losses for the whole day. The next day you can take another loss, you're $400 down. Then you go and take another trade, you're $500 down. You're like, oh my days, what is going on? And then the next trade, which is just 6th time, this trade goes and runs for a 1 to 10. Now that trade running for a 1 to 10, meaning that you delete your $600 loss and you'd be up 400. Yeah, you just deleted your $400 loss or your $600 loss and you're up 400. And then you go again and you lose and you lose and you lose. 3 in a row, you've lost now. Now you're only up 100, but the next trade, boom, 1 to 10 it goes. So you make another 7 on that. That 7 added to the 1 that you've got there. Now you're up 800. And that's how trading works. If you think it works another way, because that's what on Instagram, the guy says, look at my account, I've got a 99% win ratio. He's a liar. If you had something out there that's got 99% win ratio, well, at that point in time, the risk of it not going correctly is out the window. So why aren't you risking it all? If I had a strategy that's got a 99% win ratio and I've been tracking it and testing it for some time, why wouldn't I be going all in? Is the question. Why wouldn't I be going, listen, let me tell you something. My strategy's got a 99% win ratio. I've got a 1% chance that this thing doesn't work. Listen, I'm putting everything in. I'm putting 20K on black. Yeah, I'm going all in. Well, the reason why they don't go all in, and these traders that are selling courses on Instagram don't own small islands or small countries, because their strategy isn't 99%. They show you their wins, but they will also have substantial losses. Like this, let's just forget about this holy grail of us. We're going to find some strategy that's going to be 80-90% correct. Forget about that. Yeah, you just want to be able to survive in this trading by managing your risk to the point where you get to the point where you start having ever so slightly, instead of it being 6 times you've taken losses, then you get a win. Maybe it's only 3 times. You lose, then you win. Now you're up 7, and then you lose, and then you win. And then that might be a 1 to 5. Then you're up another 3. Then you start compounding your account like this. This is how what's going to happen in your trading journey. All right. And maybe right now you got a 7 out of 10 ratio where you lose in 7, and you're only winning 3. Well, let me tell you something. Those 3 that you win have got to outstrip the 7 losses. Yeah. If they're not outstripping the 7 losses, you have a losing strategy. You have a losing strategy. If they outstrip your 7 losses, yes, your win ratio is not very good with your strategy. However, you're still a profitable trader. You still lost your way to success. Have a look at our trade. Still pushing. I said I'm here. At this point in time, we have the previous battlefield, which is down here, this gray line here. Okay, let me delete this to make it a bit clearer. This gray line over here, I'll delete this also. This is the imbalance that's now been closed practically. Yeah, practically hasn't fully been closed. But this gray line is a previous imbalance, a previous concern. And when it gets to that previous concern, I'm not trying to say it won't melt through it. Try and get liquidity from below some of these New York sessions. But it's a real point of interest for me. But yesterday, as I described, we had an outside bearish candle. And what does that mean to us? It means that potentially, let's say yesterday, it wasn't yesterday, it's Friday. That's the only concern that we have, is that potentially we're going to get another red candle. My only concern is A, it was Friday, and B, we are at the bottom of a range. So even if this range makes an equal low or makes a little doji candle, we may see this ship here that's been sailing down here, we may see it turning around to try and get back up into a premium, because that's all markets do, is they move from discount to premium, premium to discount, discount to premium, premium to discount. That's all they do. That's what happens in the markets. At one point your trainers are cheap, and then they're expensive, then they're cheap, they go in the sell, then they're expensive, and that's all that happens. Yeah. And that happens in all markets. At some point when you go and buy your fish, the man's charging you the price. And if you go there another time, for whatever reason, he'll say, you know what, listen, you can take it for this price. Because maybe he's trying to clear his stock. Yeah, maybe it's the end of the day. Maybe he doesn't want to walk or go home with that fish. But there was a point in the day where that fish was at a premium. There were so many people trying to buy that fish, he didn't have to drop the price. He wasn't ready to go home. So why should he drop the price? Price was a premium. Like, listen, man, can I get that fish for £2? No way, bro. £2. I just saw that woman over there for £10 a fish. At the end of the day, he's like, I don't want to go home with this fish. If you want it, you can take the box. You can take the box for £10. Yeah. So therefore, based upon the time that you was in the market, which may be your strategy of getting to the market at the end, so you can get these great offers, these great discounts, will dictate, your profitability, your success. Because if you get to that market right in the middle of when everything's popping, no one will give you no discount. He's gonna be like, get out of here, bro. What are you talking about? I've got guys left, right, and center trying to buy this fish from me, ripping my arm off for the fish. But if you're clever and you try and work brain on the strategy, you can say, the market shuts at 6. I'm gonna get there at 5:30. Now you may not be able to get your particular type of fish. Maybe it's at that point in time, maybe run out. But if your particular type of fish is there, if you are patient, if the sun is shining on you, you got a high possibility that you're going to get it for a great price. That's the analogy I'm painting in these markets. If we get there at the right time, if we have a correct strategy, if we understand that there is an element of risk of getting here late, there is an element of risk that we might get there and there is none of the fish that we want. So therefore, unfortunately, we're not in the markets today. Sorry, we didn't take any trades. We didn't see what we wanted. We didn't take the trade. But either way, if we're trying to work brain on our strategy, we get to where we need to get to at a certain time. We look for our setup. Our setup might be that we're looking across all the fish traders, and we're looking for the guy who's got the most boxes left over. And then we're going to go over there and we're going to say, listen, what have you got, man? End of the day, I don't mind, taking a whole box. That's a strategy, guys. Yeah, I know I'm talking about fish when we should be talking about the markets. But what I'm saying is that is actually a strategy. When somebody says you're going to the fish market, let's go now at this time. You say, nah, bro, we don't go now. No, wait, sit down, chill out. We're not going now. And they go, why? Just wait and see, bro. We're not going now. We're going to go later. Because you have a strategy of what you want to do at the fish market. All right. Now, if you're just going to the fish market anytime, willy-nilly, as they say, yeah, well, you have no strategy. You're just going in there hoping for the best. There's some traders out here that have no strategy. They're just going in here and they are just hoping for the best, crossing their fingers and taking a trade. All right. That's something that you can't replicate. And let me tell you something. You might get some success. You might actually take that trade and it goes really well, but you can't replicate that because you don't know what you did. You don't know what time you went to the market. You don't know if did you pick a particular trader? So you can't replicate the success. And trading is not about taking one good trade. We've all taken one good trade. You can close your eyes and hit the button and take one good trade. But you can't replicate that success. So if you can't replicate the success, who cares? You're not just trying to make one money for today. You're trying to make one money for the week, for the month, for the year, for your family, for your future plans. And a lot of people get quite confused because one of their friends says, yeah, bro, I took a gold trade. I made $5,000 from gold. Okay, that doesn't mean you know what you're doing. That does not mean you know what you're doing. At that point in time, I can't give you my money to go and trade in the markets because you haven't displayed to me you know what you're doing. You just took a good trade. Yeah? So, that's the rant over, and that's the understanding of the landscape. This is a language. Trading these markets is a language that you have to learn. Yeah? And you have to learn the psychology of trading. So when somebody's turning around, that's why they turn and they say things to you like, if you think you're going to take your $100 and turn it into 100 million, it's unlikely. Because if you're following the rules of trading, managing your risk, etc., and waiting for good setups, this is near impossible. But what you can do with a small amount of money is you can show that you can build a track record of taking profitable trades, of being profitable. Because if I could turn around and you can show a piece of paper saying, look, this is what I've done for the last 6 months with my £100. Yeah, I've been this percentage profitable. Yeah? Then at that point in time, someone will say, well, bro, you know what you need? You need more money. Your results have been fantastic. I do see it, but you just need more money. Can you replicate those results of making 20% on $100,000? Because if you can, that's a good return. I don't get that return from the bank, and I've got that money sitting around there, Jason. So I tell you what, take the money. Do replicate what you've just done with $100,000. And when you do that and you've got a track record, someone says, listen, that was okay, but you just need more money. Here, take $1 million, take 10 million, replicate what you just did with 10 million.
Motion detected at your front.
Now you've made 2 million, and now you get to buy a big chain, a big house, a big car. But you haven't done anything different. You haven't changed your strategy from when you had the £100. You've just got more money. That's what trading is. It's not taking your £1 and turning it into quadrillion quid. Yeah, it's unlikely. If that was the case, traders would be taking every single pound that they have and turning that pound into a quadrillion quid, and then splitting their quadrillion quid into pounds and turning all of those individual pounds into quadrillion quids again. That's not what happens. It doesn't happen. That's just a fiction. That's science fiction at that. Yeah? That's why we can use prop firms to try and build up our own war chest so we can start building up our own capital. But the bottom line is, even when you're trading your prop firms, you should be much more interested in getting that consistency of a profitable strategy. Even if that is that you lose 6 times before you win. You want an overall profitable strategy that you can turn around and be like, look at my results, bro. I need more money. Let me tell you something. You show those results that are verified. You can do that by using different techniques, showing your history, getting a MyFX book that are verified. There will be people left, right, and center that will give you money. They'll be like, listen, Sister Abana's got something. She's doing something. Let's give her some money. It's only 10k. Hey, take the 10k. Who cares? Or it's only 100k. It's relative, isn't it? Someone says it's only £1 million. Let's see what she can do. She's shown us the proof that she can do it. Let's see what she can do. And at that point in time, then you realize that all the stress and all the hustle, all the, you've been able to learn these charts. This is when it comes to fruition. When you're a money manager and you have funds under management. Because now when you make 1% of your £1 million, that's going to be £10,000. Yeah, and £10,000 in the world is £10,000 in the world. Yeah, whereas when you make 1% and you're £100, you make £1, and £1 is £1. It's not going to buy you what £10,000 can buy you, even though you took the exact same trade. Yeah, even though you took the exact same trade, nothing changed, the same strategy, the same risk, everything. Because you don't have enough money, you only made £1 and I made £10,000. So I'm in Bond Street buying myself, a £2,000 t-shirt, and you've got your £1 in the corner shop trying to see if you could buy penny sweets. But it's the same strategy. Your bank is doing the same stuff and they're only looking to make small percentages. Why? Because they manage huge amounts of money. So if today they make 2% on their account, that's 2% on $2 trillion or $1 billion. They're happy with that return today. Their investors are going to be happy because they don't promise their investors 2% a day. They might be promising their investors 5% a month. But if you can make 2% a day, you can pay people 5% a month and live your best dream, your best life. And that is what trading is, guys. All right. Let's have a look at these markets and before we finish up and see exactly what's going on. All right. Have been looking on NAS because I think NAS is going to get bearish for today, even though there was a previous bullish candle. I don't. Let's stick to our candle because remember it's Monday, and on Monday we can, the markets can be readjusting, all right, to the weekend. And over the weekend we have heard stuff, we have seen Putin talking, we have had some stuff that Alan's put in the group also in regards to the world, and these things, as I mentioned earlier, can have a effect on the markets. Okay, so like I said to you, with this gold trade, I am in this gold trade for a buy, but only up until a certain place, whereby at that point in time I may be thinking to myself that this market may want to turn around. Okay, so that place is kind of around this area. All right, now why is it an area, a big rectangle and not a line? Because like I said to you, I cannot predict the future. I can't say it's on this line exactly the market's going to turn around. I don't yeah, I don't know, but I understand this market is pushed down with strength and speed and broken structure. I understand it's made a big old manipulation M on a 4-hour time frame. I understand, so therefore the middle of that M in here where I've marked becomes a point of interest. I understand that there's huge imbalance that has formed on this big red 4-hour candle, and the market's like to close that imbalance. I understand all these things. This is my edge, me having this understanding. I can see more imbalance on the on the 1-hour time frame, which happens to be exactly 50% of this Asian session range. Look, if I was to do this from here to here, so this area in here becomes a point of interest. So like I said to you, like I drew the path before. Where is it? Here. the opportunities of this market may be making, this isn't the path, I'm sure I drew another one somewhere, all right, that this market may be pushing in here bullishly, even if it wants to sell. Even if it wants to continue being bearish, there may be a bullish retracement that may occur. Hence the reason why I am in a buy at the moment for gold. Okay, I saw the market come down here. I saw some small bits of liquidity taken over here from before in like a Frankfurt session, and we saw this market pushing up. But ultimately at the moment, this market is trading within a range, and that range is this box here. That's the reality, right? It could do anything within this box here. I'm hoping that we break up here and start pushing in this direction. That would be great. Okay, by the moment I do not know. All right, now same with our GU. Our GU energy was, I had a lovely sell from here to here, but this market here, even though it's an outside red candle, we are at the bottom of a range. Remember the range we spoke about? Premium discount. We're at the bottom of this green range. Now overall, I want to sell this market because of this yellow line up here, which is premium, the most expensive it's been, okay, within this trend, this downwards trend. But within, I know that these markets move in waves, and within this green wave, we've made lower low, lower high, lower low, and on the short term we may be making a lower high. So even though I might want to sell it, the market might push up here bullish first before we sell. Now I can either sit here patiently and wait for the market to get up into here, into this level, maybe here into this previous little battlefield we can see over here. Okay, and what do I mean a previous battlefield? I mean an area where the market couldn't break, broke it with aggressively red candles, boom, 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 boom. This is a point of interest over here. There was a point when there were a lot of buyers in here, and then sellers came in and pushed straight past this level. This is a previous battlefield. You hear about support or resistance becoming support, support become resistance. So maybe this market wants to retrace all the way back up into here. Yeah, back to the top of this range in a premium of this smaller green range, and then we start seeing some bearish action again. Why? Because the markets move within trends, and currently I've identified this green little trend, this green little channel that this market's trading within. Now that alone doesn't allow me to just take trades, but it gives me some sort of context of what may be occurring. The market is currently trading down like this, making lower lows and lower highs and lower lows. Is the market going to start breaking outside of here to get to this level in here? And that's on a 4-hour time frame. On a smaller time frame, you'll be able to see a smaller range, because these markets are fractal. All right, as in they do the same thing. As you zoom in, you see the same thing again. You zoom in, you see the same thing again. You zoom in, you see the same thing again. So if I was to do on a smaller time frame, this market has been trading down here. All right, for us to do a line in here. Why am I drawing a line like this? Oops, that's wrong. Why am I drawing the line like this? Because I want to touch the last high before the lowest point. This was the last high over here before this lowest point down here. And we've broken that structure. Smash! Making a higher high. Therefore, this could be a higher low. Therefore, we're going to be getting a higher high now. Hence the reason why this sell was selling into here, on the basis that maybe this market's going to start pushing, because we're at the bottom of this green range. If you can't remember, the green range is this one here. And if you can see right now, even though I was in that sell and I told you I took my profits as we got down to that area of concern, look how we've seen a lovely reaction from over here. We've seen a lovely reaction giving us displacement. We've seen a reaction breaking structure, price breaking outside of this smaller range. All of these things are making me think to myself, okay, maybe the market wants to tap in at some point and continue pushing up. Because in this smaller range, this push up on a certain time frame, let's say for example 5 minute, would be a higher high, breaking this structure here, the last high before the lowest point. This would be a higher high. Then we may see a higher low. Then we may see this market continuing to decide to do this. And then when we zoom out, wondering where that market may go, well, that market may be trying to make a bigger, higher high. Let me hide this indicator because it's a little bit It's a little bit hard on the eyes, okay? Look, the market may decide from this green, which is a discount, that the market wants to make a higher high. Look at my dots down here. Make a higher high. And then this was the higher low. So maybe the next thing it wants to do is make a higher high, especially towards areas of liquidity. It's very, very possible. Now, even though that thing's happened right whilst I've been speaking to you, we've seen that big push, I can't just hit the button there. Because it's gone. It's gone already. The train's gone. The gravy train's gone already. Boom. Brrr, it came up here. Alright? But what I can do is I can identify where the market may retrace to and give me a potential entry. Okay? Well, this whole energy over here was kind of like a previous battlefield. Yeah? Not the line, a whole area. I can make a square there. Alright? And if I look on a larger time frame, maybe my 10-minute time frame, maybe even my 15-minute, but I haven't checked. Let's have a look on the 15-minute. 15-minute-ish, all right, but let's just say 10-minute. We can see how the market made a lovely manipulation W pattern, breaking the middle part of that, that area where there was structure. You can see where my white line is. And maybe the market's going to come and tap back in here, which may give me an opportunity if I drop my time frame down to get a lovely entry in here. Or I'm going to wait for the continuation. Yeah, so this is indication at the moment of what the market may want to do. This would be correction of it coming back down here, and then continuation would be it closing above this wick for me to make a decision of what I want to do. And even when I make that decision, I am going to be managing my risk. We've seen this market break up here. Look, it's making lower lows. Have a look. It was making lower lows. It's making lower highs. It's making lower lows. It's making lower highs. It's making lower lows. It's making lower highs. It's making lower lows. Started making some trading sideways. And then we've had higher low. And now we've seen a higher high. And now we've seen a higher low. And now we've seen a higher high. So maybe this is showing the market it's changed. Something's changed. Yeah, the market was coming down here like this. Something has changed. Now the market's done that. And it's retraced and it's broken outside of this white trend, white range. It's broken outside of it. So maybe we're going to get it back in here, and that's how we try and predict what's happening in the markets. We read and react to what the markets are doing. So even though this market, I've seen it come up here after taking a lovely trade from all the way up in here, I'm watching it and seeing if I could just give me an opportunity to get in. Are we going to get back down into this previous battlefield over here to allow me to get into some sort of buy? Are we going to just come and correct over here? That's going to allow continue. So over here, that's going to allow me to take a continuation trade as the market closes above this wick. Because when it comes into here, remember I was looking at it on the 10-minute time frame. I was saying that there was a manipulation W, and we're seeing this market coming back and retracing right now in the candles. All right, I'd have to drop my time frame to get a smaller entry, or I've got to wait till this pushes all the way up here. So that's when you see me dropping my time frame, seeing this retracement. And then I'm going to be looking for some other confluences, some other signals that this market wants to do something. Well, I've already put in my lines. Look, my dots. My dots are already looking like this. If I connect them, look, here to here, to here, to here, to here, to here. I don't really want to see this market coming and breaking past this level in here. So all of this coming down here is sitting on a potential previous battlefield. If right now I start seeing the right kind of signals from these candles, maybe I decide to get in for a buy. Yeah, why do I decide to get in for a buy? Because we're in a discount on this big green line here. Yeah, and the market's already closed the imbalance, and maybe this market wants to turn around and start pushing up bullishly. Maybe. But either way, I still can't do those things until I get my confirmations. Any questions, guys? Any questions this Monday morning? Any questiones this Monday morning? Have a look at the gold little play. Still in here dancing around. Still in a bit of profits. Maybe I'm $500 up. It's just been dancing there for time, to be fair. It hasn't done anything. All right, it's been dancing. Look at it on a smaller time frame, just dancing. Doing a two-step. Now, we need to make sure we have a look at our news. It should be done first thing in the morning. I've already done this morning, all right, to look at our news, to understand what's going on. There isn't too much news happening today. All right, have a look. There isn't too much red folder news happening today. Hopefully we can get a day of just trading, calm trading. However, remember the markets are playing catch up to the weekend. when it's playing catch up to the weekend, we're talking about when those sessions start, whether they're going to be a New York session or London. When those sessions start, those orders from their clients need to start getting executed. Yeah, and that's when we see the volume and the volatility coming into the markets. All right, and that's what we need to be aware of, and ultimately what we want to ride. We want to ride that volatility, all right, to be able to prosper. Okay, and that's it, guys. That's how simple or how difficult, yeah, trading is. All right, guys, have an amazing day. Any questions? Any questions about anything? Any questiones about anything? If there's no questiones, I'm going to love you and leave you. I'm going to play something that's going to allow us to expand our grey matter, all right, on YouTube. If you can stay unwatched, and fantastic. If you can't, have a great day. For those of you that have been listening online,